Welcome, everyone, to today's discussion. We are going to be talking about market and policy trends today for 25 and 26. So we will kick it off with some trends about 25, and then at the end, we will talk about our predictions for 26, as well as Q&A. In the bottom right of your screen, you should see that questions button. That's where you can pop your questions in. Any questions you have as we go, please put them in. We'll hold them until the end, but we will try to address every question that comes in. With that, no further ado, these are today's speakers, including myself. We have Bryant from Piper Sandler and Jeremy from Venable. They will introduce themselves a little bit more when we get to their sections. But to kick us off, I'm going to start a little bit about Liminal. We are the actionable intelligence platform for complex markets. Bear with me, it's a mouthful, but what we do is we unify market, competitor, product, and buyer insights into strategic guidance that turns noise into clarity and execution into outcomes, so that every team knows who to target, what to say, and how to win. We have our flagship platform called Link, and on top of Link, we have a bunch of products like Sales Hub, Scout, and others that really enable you to execute faster and get into a better position across your competition. I always have to have the logo spray. So these are some of our customers that, we are trusted by industry leaders. And here's, a little bit of a logo spray. But with that, let's kick it off. We do these market trends throughout the year from our surveys. And so our surveys capture what the buyers and vendors are thinking about, what is top of mind, what are some of these things that are really that they're focused on. And so I picked out of the 30 trends that we've seen so far, picked out the top 6 identity trends, and I also have 3 cyber trends that I'm going to hit on. So the first one, no shock, agentic AI, you have to mention it. I mentioned it within the first 10 minutes, so I get my bonus points for this presentation. But in all seriousness, this is truly redefining the identity frontier. Agentic AI is transforming digital identity from being human-centered to a dynamic system that includes machines and autonomous identities. So it's no longer just sufficient for you to identify a human. You now have to be able to identify the non-humans and autonomous systems as well. And from our surveys, we see that 86% of practitioners now are managing non-human identities. So just saying bot or no bot is no longer sufficient. You have to decide, is this a good bot? Is this bot tied to any certain person? And so you have to make sure that you're able to manage these. These agents are being deployed to automate some KYC flows, doing fraud screening, onboarding flows. They're actually working with customers. And so again, agentic AI is marking this new identity category, one where governance, attribution, and consent frameworks have to extend beyond humans. This is a massive trend that we've seen in 25, and I'm obviously a sneak peek to 26. This will be the topic that we're all going to be discussing. The second trend is maybe a little bit on the negative side of that same coin, which is that with this beautiful AI that is really facilitating all of these amazing interactions and getting you more efficient in your company, there's also the deepfake and synthetic threats. The same AI that's used for good is being used for bad. And so this deepfakes and synthetic threats are outpacing market readiness. 71% of institutions are lacking advanced AI or ML tooling. 50% are still relying on legacy systems. If you're relying on a legacy fraud system, you're toast. It's not going to happen. And we've done surveys for years now. The biggest gap we've seen is that 98% of practitioners are aware of deepfake and synthetic threats, and less than 25% feel equipped to detect these and try to stop that deepfake synthetic-based fraud. That delta, that gap is literally the biggest gap we've ever measured. So everybody's really aware, but the preparedness is still lacking. And that preparedness is a big concern for everybody. So with that, the trust infrastructure combining liveness, provenance, and authenticity validation is becoming a foundational layer of digital identity. You cannot just rely on the old stuff. You have to figure out how do you combat this new threat with the new tools, as well as combining some of your existing tools and figuring out, put that piece of the puzzle, in there and figure out how you're going to combat this. The third one, perpetual KYC adoption is accelerating. I actually had a conversation last night with Alyssa, called you out, Alyssa, I told you I would, about perpetual KYC. And we're still a little bit on the fence, but as we see from these numbers, we're seeing that 28% of financial institutions have already adopted perpetual KYC. You may ask, what is perpetual KYC? It is basically an ongoing monitoring of a person instead of that typical process where you KYC them at the onboarding process, and then you KYC them again maybe a year later because your AML program says you must. Perpetual KYC is an ongoing basis where if there's any sort of transaction or activity that looks suspicious or deemed out of band, you are constantly trying to monitor to see, is this the same person? Has their risk profile changed? Should I be adjusting my program for that? And so we're seeing already being adopted, and we see that 43% of institutions are planning to do so within 2 years. It enables, as I mentioned, that continuous monitoring and automated updates, and it reduces that manual workload. So we think that perpetual KYC is going to represent the operational backbone for that compliance and for early risk detection. The big question we had last night, and I'll throw it out here as well, and maybe the audience can weigh in too with some of the questions, is, are institutions really, really wanting to pay for this? And then the second question, do they want to know? Do they actually want to know? Because once you know, you have to act. So that's the big question about perpetual KYC. It's a big trend, though. We've seen a big shift in there. So again, that's why we wanted to highlight it.
Hey, Philip. Sorry
Yes.
to interrupt your flow. I see a couple questions on this. The screen isn't sharing particularly well. It's pretty small.
Let me try again.
Yeah.
All right. Awesome. Okay. Thank you, everybody. And thank you, Bryant, for hitting me up on that one. Okay. So perpetual KYC we just did. So let's move on to number 4. This one is, again, driven by a lot of this AI fraud as well, but fraud and authentication is converging via probabilistic signals. So fraud prevention and authentication are collapsing into this unified risk engine. Teams are starting, companies are starting to realize, hey, why are we keeping these teams siloed? Why are we keeping the data siloed? If we put the data together, we get a much more complete picture of what is happening. So we're seeing it again based on survey data. 74% of buyers are augmenting deterministic signals like the credentials with probabilistic ones, behavioral, device, network information. You cannot just rely on one. You have to try to connect all the dots together to get that complete picture. And so continuous identity assurance is replacing the static verification, which is driving a new market standard for real-time contextual risk scoring. You have to constantly monitor what's going on. Account takeover is a great example. If you are just relying on the deterministic signals, you'll probably never catch an account takeover. And so with that, combining these, we're seeing these mergings of these teams, fraud and authentication. We're also seeing fraud and AML starting to come back together again. Don't want to call the term, but I'm going to call it anyways. Framel's back. We're seeing a lot of teams combining there. And we're even seeing cybersecurity and fraud joining hands. So there's a lot of convergence inside companies because teams are starting to realize, hey, fraudsters don't care about my org chart. They are going to try to steal my money, steal my secrets, whatever it is. I better organize myself to combat them as one team instead of having these siloed teams working together instead. Trend number 5. Buyers are accepting controlled fraud to preserve user experience. So there are organizations, and we're seeing 88% are reporting that they're easing fraud defenses in some of the account recovery or checkout flows to reduce churn. And it's just because a lot of companies, there's a ton of competition here. There's a ton of eyeballs that people want to attract. So any sort of friction for a good customer will turn into a negative, and they will lose their customer. They will lose that sale. So they are aware that they have to truly balance fraud with experience and find that line that they feel comfortable with. How much can I lose? What am I okay to lose to still have that growth, to still have those good customers come in and buy our services, use our services, etc. So adaptive authentication, balancing conversion and protection is going to define the next generation fraud prevention frameworks. You cannot, again, be in a silo. Your fraud team is hopefully talking a lot to the marketing team, the growth teams, to understand where the strategies are. And so that's, again, a big trend that we're seeing. People are not happy with the fraud that they're doing, but it outweighs the good user getting through and being able to transact and interact on your platforms. The sixth trend on the identity side is ownership transparency, and shell companies are remaining a blind spot. There is low confidence in identifying beneficial ownership. It is a very hard problem to solve. We're seeing a lot of companies come into the KYB, know your business, or BEV, business entity verification space, but ultimate beneficial ownership is still a pain to solve. And that's where we're seeing a lot of companies struggle. About, again, based on the survey data, only 18% of small and 29% of large institutions feel they're capable of detecting shell companies. It's a very small number. And so manual ultimate beneficial owner, UBO, verification processes are slowing reviews and are increasing compliance risk. It's a maze. You got to try to find the exit. And so trying to find who truly owns that business, if it's layered to come across a bunch of shell companies, is a very labor-intensive process. And a lot of times you get stuck and you cannot even find, can't find the exit. So expect increased adoption of AI-driven entity resolution and UBO verification tools as regulators tighten enforcement. And Jeremy, I'm sure you're going to hit on some of this with your presentation on the policy side, but the US not having that registry was a big hit here, but the rest of the world is still moving ahead with really trying to understand who owns these businesses, what are the purpose of these businesses, what is the money, where's the money going, where's it moving? And so that's a big one for us as well. So those are the identity ones. My top 3 cyber trends for 25. Identity first security becomes the organizing principle. Cybersecurity strategies are increasingly built around identity assurance. This is a wild stat. 99% of buyers view embedded identity verification as critical to cyber platforms. Near universal. Everybody believes that identity is that key piece in protecting your company. M&A activity, Bryant will hit on this, I'm sure, is underscoring this identity-centric shift. We're seeing a lot of activity, especially in the last couple of months. The takeaway here is the perimeter has fully shifted from networks to identities. Platforms are evolving into an identity-native ecosystems where verification, access, and detection, again, are converging. The big word, and again, 26, convergence is going to be massive. AI agents revolutionize cyber defense and SOC operations. The agents are being deployed to orchestration, incident response, triage alerts, and mitigate threats autonomously. 88% of organizations have observed AI agents performing operational tasks. So folks are really leaning in and trying to figure out, like, how do I use the AI for good? The AI is used on us for bad. How do I fight it with some AI that we can actually implement? Mentions of agentic AI have increased 17x since 23, with almost 50% CAGR in 24-25. It is literally the main topic. Every day we talk to customers and prospects, it comes up every single time. So I feel like I've used agentic AI at least 17 times in my presentation today. So it's going to automate up to 40% of tier 1 SOC workloads by 2026. Shifting analysts towards more governance and oversight roles instead of doing that actual investigation. The third trend, AI-generated threats force the evolution of detection models. As again, AI for good, AI for bad. AI-powered attacks, synthetic phishing, malware generation, deepfake-driven intrusions are escalating. It is just exploding. And so enterprises, again, report being ill-equipped to detect these exploits. And now you have to have wow, I can't even speak today. Adversarial AI testing and data provenance systems are emerging as must-have capabilities. You have to stay at the forefront of this. Otherwise, you will get completely cleaned out. And so detection models have to evolve towards AI for AI defense, incorporating these real-time model adaptations and provenance assurance to maintain that resilience. I can't stress that enough. If you're not combating AI with AI, you're most likely going to lose. And with that, that is my part of the presentation. I am now going to stop sharing and hand it back over to Bryant, who's going to take us through his portion. Bryant, the floor is yours.
Perfect.
We'll have the audience tell us if it's good enough with the emojis.
Exactly. All right, just quickly, thank you. Sorry for the technical difficulties. So I'm a managing director at Piper Sandler. We focus on really two categories in the convergence within cybersecurity and increasingly fraud and identity. So we cover cybersecurity. We've done 45 transactions in the space over the last handful of years. Some notable logos on the right side. We'll talk a lot about the Palo Alto CyberArk deal. We actually sold Venafi to CyberArk. We sold BehavioSec to LexisNexis in the fraud space. And together with our fintech team, have increasingly been spending a lot of time with Liminal on the convergence of cybersecurity and fraud, which are increasingly, as Filip just noted, kind of intertwined. One plug for our CEO Summit at RSA. For those that attend RSA, we have taken over sort of the Monday of RSA week and have a great set of speakers. We had Charlie Bell as the opening keynote last year. Punctuate a lot of identity focus this past RSA. Matt Cohen from CyberArk, Todd McKinnon from Okta, Christopher Alberg, and Recorded Future. We had MasterCard on stage talking about that transaction, and so a lot of relevance to this audience. So I'd encourage everybody to reach out and attend if you're able. What do we expect? What are we seeing across the cybersecurity and identity markets? I think number one, valuations are very strong right now. I think these are buoyed by certainly AI. I think a lot of public market investors see cybersecurity and identity as areas of clear use cases, tangible use cases for AI. AI is not new to cybersecurity. We've been using AI for detection models for a long time, but it is certainly buoying public stocks right now. We'll talk about that. I think easing interest rates over time should support these strong valuations. And I think notably cybersecurity and identity garner a premium to the broader software group. I think so for those that are able to tell a strong cybersecurity story, you will garner a premium. Number two, we expect the IPO market to start to unlock. It's been slower than we anticipated. I think Netscope getting out in particular, SailPoint's been trading very strongly. We also would like to see the return of smaller cap IPOs, just given the heavy backlog we have of late stage private companies, as well as private equity held assets that need to get into the public market. Number three, growth, however, for those that are operators on this call, I think you would attest growth does remain challenging. And so we spend a lot of time with our clients and prospective clients talking about how to be nimble, how to really emphasize and focus and understand your ideal customer profile to make sure you're spending sales and marketing dollars resourcefully and really emphasize kind of sales efficiency as well as retention. We'll talk about sort of the metrics that really matter to both buyers and investors throughout this presentation. Number four, we are seeing, tremendous kind of rationalization of vendor sprawl. This has been a trend for a few years now, starting in 23 when CISO budgets started to contract. But, I think as evidenced by what Palo Alto has been doing, kind of this platformization concept, we do think this is going to continue to drive increased M&A. However, a lot of that is being driven by private equity-backed strategics who are looking to build platforms. But I think for single product companies who are having a hard time growing and expanding your base, I think the idea of creating multiple product platforms gives you the ability to drive, much better cross-sell and net retention. I think notably for this audience, we continue to see consolidation within identity. We'll talk about what that means. And we're also seeing a lot of convergence of identity and fraud, as Filip alluded to. I think finally, we think we are obviously asked frequently about AI. Security to protect AI models is certainly a new attack vector that seems to be attracting, a lot of interest among every strategic. And you've seen some very lofty prices paid for these companies. I think we're also monitoring a separate, trend within AI that is, we're definitely seeing, the product development cycles speed up, and it is actually changing some of the buy versus build calculus for strategics. I think conversely, to combat that, right, we are also seeing startups, build product and get to scale using less capital, right, raising less capital to get to similar outcomes. So that's another trend that we're watching kind of over the medium term. So on the valuations topic, this shows multiples over time, forward NTM revenue multiples since January of 23, pretty much up and to the right. You can see sort of pre-pandemic, we were at about 7 times. We're now almost at 10 times for the aggregate software group. And that compares to about 11 times where we were at peak, during the pandemic. So we are definitely at lofty high numbers. And we think that has been driven though by improvement in businesses. So we talk about the rule of 40, right? Free cash flow margin plus your growth rate. And the growth rate has not changed. Actually, it's held in there pretty stable over the last couple of years. But as you can see in the orange backdrop here, the rule of 40 has gone from about 35% all the way up to 44%. And that's been driven by margin improvement, almost 9 points of margin improvement. So companies are getting stronger and healthier, and we think that is supporting some of these higher valuations. I think what is also notable is, pandemic, we were trading at 11 times, but interest rates and money was basically free. And so, now at 4.3% interest rates, we're at these levels. We do see that interest rate coming down over time, which we think will, again, continue to support probably higher valuations. I think also notable is we've only had 5 IPOs basically since the pandemic. And so as soon as that IPO market starts to unlock, we do believe there will be strong demand for, higher growth assets, and that will hopefully continue to support strong multiples. I think security trades at a premium. I think the street continues to love security. It has deserved the premium. It's growing faster. But it's also commanding, a lot of the private equity and venture dollars. And so, I think it's not hard to understand the data that supports this trend, right? Year to date, security is up 25%, which is better than any of the others, including the Mag 7. And it's, again, supported by stronger growth. On the right side, you can see 16%, LTM growth versus the other peers here growing slower. And that is in large part, as many on this call know, that the CISO and CIO budgets for security and fraud continue to be strong, healthy. I don't think CEOs really want to touch those as much, right? And I think we'll talk about, in Jeremy's presentation, some of the regulatory dynamics going around both cyber, identity, and fraud. And I think that will continue to drive spend. As I said, security does command a premium. What does that mean? That means that for every point of growth, right, security companies are awarded a 0.55 multiple. You compare that to the broader software group at 0.42. So security is garnering about a 15 to 20% premium for every point of growth, right? Not all growth is equal, and security companies do trade at an observable premium to the broader software and infrastructure group. A couple other reasons why I think notable are we chose a few companies here to profile. Cloudflare trades at 33 times forward revenue They are growing very quickly, but they have obviously built an incredible CDN platform that really has no primary competitor, and they are telling a very compelling kind of AI story to enable AI development across their network. Zscaler has maintained 115 plus net dollar retention for a long time now. They've been very effective at integrating some of the acquisitions they've done and continuing to promise and deliver on very strong growth. CrowdStrike, meanwhile, has also done a phenomenal job driving high net retention through an M&A strategy. They've added, they have 25 different modules they're selling now and have increased their TAM 4x over the last 4 or 5 years. And they continue to trade at a very strong multiple. And CyberArk, obviously just acquired by Palo Alto, Matt Cohen, to his credit, was one of the best run companies in security, always traded at a premium. They always out-delivered on their expectations and drove very efficient growth in that business. So just a couple of examples to call out why some of these cybersecurity companies, trade or have traded at premiums to their otherwise infrastructure peers. So number 2, the IPO markets, we would really like to see this unlock. I think a big driver of that is the significant spend by private equity that happened in 2020 to 2022 is starting to come due. And so, they have time clocks, unlike venture investors. PE has a window. They need to start to see, returns of capital to their investors. And so you can just understand the pressure that's building in the system. We have had only 2 IPOs in 2025. There are a number on file. We expect more. And I think the profile of company, there's been a talk track about why that companies need to be much larger to go public. And you can see that evidenced here in the detail in the revenue size. The companies have gotten much larger that have gone public over time. You look back at the kind of the band of IPOs back in the 2015 era, the median revenue was $123 million, growing faster, but also losing more money. And from a rule of 40 perspective, you can see that, the quality, if you define it as quality, has improved over time. And the sales efficiency has gotten better over time. But our Piper's view, based on our sales and trading team, is there is very strong investor demand for smaller IPOs, smaller companies that are growing north of 30%. I think when you look back 2 years ago, there were probably 25 software companies growing north of 30%. Today, it's basically one. It's Palantir. So in public market investors invest in technology because of the growth. And right now, there are very, very few kind of high growth security software names out there. Security produces more of them. And so we think that for companies that are growing kind of north of 30%, there is a real opportunity to tap the public markets. And I think the evidence is there to support it. Smaller IPOs that are less than 200 million of revenue at time of IPO have outperformed their larger cohort every single year post IPO. They also have higher revenue growth. They also have shown a much more significant improvement in their EBITDA margins as they've scaled. And I think notably, they have beat their revenue guidance each quarter on average by more than their larger cohort. So the idea that small companies can't predict their revenue each quarter is a bit of a misunderstanding. So I'm going to talk about growth here and some of the metrics. So growth has definitely slowed, right? And I think it's slowed in part because of budgets. I think it's also slowed as companies have stopped hiring, and so the natural sort of expansion that one gets, within the base has been harder to come by. So growth is slowing. We're observing this in the public markets. You can also see the compression here of actual growth in the public market versus expected growth. And so we do think that growth in the public market sort of steadies out in kind of the low teens, which is sort of consistent with most expectations for CISO budgets. The reality is, therefore, I think a lot of companies that have achieved real scale are going to, have to recognize sort of what's important to strategics and to sponsors and to the public markets in terms of what's important, right? And so I think this is what's driving M&A, but I think CEOs and executive teams that understand how to position themselves to strategics, the TAM expanding story like we've talked about, what sponsors are looking for in terms of the high retention rates, right, and the sales efficiency, and then the public markets we've talked about, but growth is really what's driving interest for the public market. So there's a variety of different profiles of company that are now reaching real scale, but the growth has definitely slowed. And so there are numerous options ahead for these companies, and we're working with a lot of them to help them figure out how to proceed. I think the metrics have also changed, right, versus even a couple years ago. So what used to be really great growth was 50%. As I said, I think now 30% is very hard to come by. So 30% growth, if you're growing 30%, you're doing pretty darn well. I think gross margin, more scrutiny around gross margin, has implications for sort of how the product is built, right? But it also has implications for the bottom line, how profitable a company can be. Net retention, conversely, has actually come down, right? What used to be elite at 120% is now about 115%. I think there's broad acknowledgement that companies aren't growing, they're not hiring, they're not expanding seats or licenses, and therefore any retention, any expansion you're getting is largely coming by selling additional products. And so for companies, again, that don't have multiple products, this is a very hard metric to inflect upward. Gross retention was kind of, always high 80s. Now 90% is a pretty bright line for a lot of investors, especially private equity investors. And then the burn ratio, right? How much are you burning to add ARR? We think it's really important that you start to get kind of in that 1x or even less than 1x, unless you're growing, significantly faster than 30%. I think for executives here, again, maniacal focus on your ICP. I think be obsessed with these metrics, build a moat, right? And understand your competitive landscape, understand what differentiates you and win in that regard, build partnerships, right? Have an understanding of your ecosystem. I think a lot of CEOs that we interact with don't have a very good understanding of who their potential strategic buyers are. So we help them understand, those priorities and help make introductions to the ecosystem, but it's a very partner-friendly ecosystem. And so we encourage CEOs to take advantage of that, right? And build partnerships. And then also the TAM expander, like we talked about. So how do you drive NRR? What are some additional add-on acquisitions you can do, et cetera? And so just some notable deals, some large deals, some we've worked on, but, a lot of those themes that we just talked through are evidenced, by some of these transactions. This is the full kind of metrics that matter that we publish. I'm sure Filip can share these slides afterward, but happy to kind of talk further about, the metrics for those that are CFOs on the line or those interested in sort of the metrics and the KPIs that are important. The fourth category is the kind of the rationalization or the platformization. So M&A, cyber strategics have been fairly consistent, right? You can see sort of this is the deal count, M&A deal count by the top, by the public companies, 31 public companies. 20 of them have done deals over the last 2 years. But as the consolidation wave starts, the uptick hasn't really begun yet. We're starting to see some signs of that. So again, some notable commentary on some of the key players that are being acquisitive. CrowdStrike has done actually quite a few acquisitions, and as I alluded to, really expanded their TAM from 25 billion to well over 100 billion today. They're selling, nearly 20 modules, and they're driving sort of 50+% rule of 40. So that helps explain kind of their strong multiple. But they have definitely added a lot to the platform, including Preempt, which was has been one of their most successful acquisitions in the identity space. Palo Alto buying CyberArk, right? Obviously a huge deal for our space. I think it's just further validation of what Filip said, the importance of identity. Palo Alto intends to, basically run it as a separate business. The identity buyer, as you all know, is different in many instances than the traditional CISO buyer for a Palo Alto Networks or a firewall or cloud security. And so they are intending to kind of keep CyberArk running independently, but leveraging and integrating much better with CyberArk. I think Zscaler just did their largest acquisition, Red Canary. So it's nice to see Zscaler sort of step up and do a very large deal. They are very focused on expanding their offering, into the SecOps market. They don't have much offering right now for the SOC, and so Red Canary gives them some MDR and some threat detection capabilities that they lacked. But they paid, nearly $700 million for Red Canary. And then finally, Google Wiz obviously hasn't closed yet. We expect it will, but I think this is just further evidence of Google's attempt to both improve and enhance its market share position vis-a-vis Azure and AWS. But I think importantly, it also gives them a lot of security credibility to continue building their Chronicle SIM solution as well. Like I mentioned, there has been, I think, an observable trend kind of within identity, some consolidation within identity. I think that really started with Thoma Bravo, has really led the way with buying Ping and enabling the merger with ForgeRock to kind of make CIAM really front and center for what they are doing. They are very focused on the fraud category and expanding their offerings there. I expect they will be acquisitive into the fraud category as well, as they continue to kind of build out the CIAM story for them and try to differentiate. We worked on the Venafi CyberArk transaction. I think machine identity, especially with Agentic modules, has become really topic du jour across the identity ecosystem. So machine identity, CLM, as well as kind of understanding the agents, the non-human interactions that identity vendors are now trying to protect. And then finally, when we think about sort of the broader identity category, you look at a Savient, for example, or even an Okta. When Todd and Sachin were on stage this year at RSA, they talked a lot about the convergence of these three categories: PAM, IGA, and access. I think it's true, and Savient and others, One Identity, are out trying to offer sort of a converged solution to provide, all to one. I think on the fraud side, we've seen some notable transactions, but I think more to come. I think Entrust Onfido continues to be sort of the best display of consolidation within identity and fraud. We've talked a little bit of, it's really great to see MasterCard come in and do recorded future and build more threat intelligence into their offering, especially for financial services customers. And so we expect, more activity in fraud. But I think what we're also observing is the convergence of identity and fraud. So welcome any feedback or questions on that topic. I think finally is AI, right? It's hard to do a presentation without talking a little bit about AI. The adoption is starting to be realized. I think that our view is this is a kind of a nascent market. I think that the venture capital deployment has rapidly increased. I think every company, though, tries to position themselves as an AI company. But now, 45% of venture-backed businesses are touting kind of an AI story, and that's up significantly from a year ago or even 2 years ago. The venture spend, just to comment on that really quickly, has remained fairly steady. The deal count has kind of declined a bit, but the capital deployed has actually remained steady or even increased a bit, which actually means that the deal sizes are getting larger. And so you can see that on the top chart here. This is summarizing the deal count of rounds over 50 million has actually stepped up pretty meaningfully. And a lot of venture investors are doubling down in some of these opportunities, including some of these AI opportunities. I think on however, the innovation has not stopped. And you can see at the bottom here, Series A companies in cybersecurity continue to get funded, at a very good clip. I think back to the kind of AI topic, you've probably seen some of the headlines around some of these transactions. These are outrageous prices that Palo Alto, SentinelOne, CrowdStrike, Cato, Checkpoint have made. the rationale and the business case behind these is very difficult to justify. Obviously, they're paying prices that really satisfy, cap table dynamics. But, I think it's further evidence that this attack vector that is AI and AI models and how employees are engaging with important data that underpins these models is really become kind of a front and center for a lot of CISOs and frankly for a lot of boards. A lot of this is coming from boards who want to make sure they have a story to tell. They come out with kind of a splashy announcement like this and can tell their customers and their shareholders, for that matter, that they are very focused on this category. But all taken together, this is probably nearly $2 billion of spend across these 5 companies, and they are probably producing less than 10 million of ARR in aggregate. So it's pretty stunning. I think finally, just to recap, I think the only final point I'll make is the AI point. I mean, we are starting to worry a little bit about the calculus of the buy versus build. I think in cybersecurity, most companies have tended to buy, not build, when it comes to kind of the R&D spend and the timeline and the sense of urgency to develop new products. And I think to combat that is we're also talking to a lot of, second, third time founders who say that they're able to build, their product and get out to market much more efficiently using less capital. So I think there's going to be some give and take and some interesting things to watch over the coming years. So with that, I will stop sharing and hand it over to Jeremy.
Great introduction from Bryant, as talking about some of the market dynamics. It was almost 20 years ago. I was one of the first sell-side analysts covering cyber and identity at a time when $150 million of revenue was a big deal. It was hard to get investors interested. I think things have changed quite a bit. I've shifted more or less out of the investment side now. I'm going to talk about identity in the government landscape and talk about, as it's subtitled, why the government matters in this space, even if you don't want it to. So just a little bit about me. I'm a managing director at Venable. We're a law firm, but I'm not an attorney. I co-manage a boutique cybersecurity and identity and privacy and AI practice that brings in legal services along with business and technology, policy, finance, and strategy advisory services. I've been in the identity space more than 25 years in a mix of government and industry roles. On government side, I led the Obama administration's NSTIC initiative, the National Strategy for Trusted Identities in Cyberspace, and also was the senior executive advisor at NIST that oversaw their research and standards work for a few years. Much earlier in my career, in the late 90s, I was a Senate staffer and got into this weird space because my boss was the legislative godfather of smart cards and PKI in government. On industry side, I spent about 5 years in tech building early identity systems. I mentioned my time as a sell-side analyst, and really the last 10 years since I left NIST, it's been a mix of all of this, consulting with vendors, end users, investors, and governments on how to best position in the identity market. With that, I run an organization called the Better Identity Coalition, which is a group that was launched in early 2018 in the wake of the Equifax breach, really representing a lot of the big buyers, banks, fintechs, health, tech, telecom of identity, but also some of the vendors. And we really focus on the policy layer. Also work as an advisor to FIDO Alliance, and we've helped the Health ISAC run a identity program for their members in the health sector for the last few years. So jumping in to set the stage, it's a Liminal webinar. So of course we have to throw up the map that Liminal puts together every year, which is a really nice job outlining and laying out, some of the different places, subsegments of this identity space that we're all focused on. I think one of the things that's notable is that in every sector, government plays some sort of a role. And, it might be as a provider, issuing IDs, driver's licenses, passports, SSNs, running the login.gov system. Government's also a buyer in terms of as they issue, different credentials, they need to be buying technology to issue IDs. Spend a lot of money on border security with things like TSA and DHS identity systems. They've been funding a ton of MFA through the state and local cyber grants, and obviously, buying, IAM systems and SIAM systems and others to manage their own operations. You also have the role of governments as a regulator, and we'll talk a lot about what's happening in Washington these days, particularly as we're in sort of a deregulatory environment with the Trump administration, but also some real opportunities, I think, to modernize some of the regs around identity, particularly in financial services. We've got government as a policymaker. We've seen a lot of activity in California and other states with privacy laws and age verification laws. As we'll talk about today, the Genius Act that recently passed, the big stablecoin bill, was driving some rethinking of some of the rules around anti-money laundering and combating terrorist financing. We have government as an influencer, whether it was the White House Zero Trust strategy for a couple of years ago that really prioritized things like phishing-resistant authentication, sending, I think, a strong message to a lot of industries that maybe there's something they should be looking at. NIST guidance on digital ID was updated this summer. NIST is an MDL project for mobile driver's licenses working with 7 banks. CISA has been evangelizing for the importance of MFA and secure by design. And of course, you have government as an enforcer when things go wrong or the government thinks it does, whether it's the FTC, who's weighed in actually quite a bit with use of MFA and some other enforcement actions the last few years, what the courts have been doing in Illinois and other states with biometric laws, California Privacy Protection Agency getting ramped up, and also plenty of banking regulators who have views on identity and authentication and broader tools used to manage cyber risk. So, just a snapshot of 2025, and we'll get into some of, these different, screenshots real quick in terms of what's been happening, but quite a bit of activity. I would say the first few months of the year as the Trump administration was coming in was pretty slow. And then now that they've staffed up and gotten up to speed, we've seen activity from the administration, from Supreme Court in the states, and from some of the agencies like NIST. And so we'll spend a little time today diving into, some of what has happened so far this year. I think a big thing to take away for viewers here is that while there's pockets of activity across digital identity, one of the things that we don't have compared to a lot of other countries is any effort to coordinate digital identity activities across government. And that really leads to a very fragmented set of activities. There's no vision of what good looks like or a plan to try and get us there. There's no vision of what bad could look like as well, particularly in things like consumer citizen-facing digital identity and how to avoid it. Some systems don't exist to address use cases, or they're relying on very old, inefficient legacy tools. Other times we're building duplicative systems to address use cases, but we're not really looking at any of the cross-sector, cross-cutting multi-sectoral challenges. Every time the government needs to do something in identity to date, and this has really been something over the last few administrations, this has not been a Democrat or Republican issue, the focus has been, how do we build a one-off system to solve it, rather than try to leverage what I view, we should be looking at from the perspective of common digital identity infrastructure. So what does that mean in practicality? Well, if you need to drive or get a state ID, you can stand in line at the DMV to, prove who you are, and you can get a plastic card. And in a few states, you can start to get a digital counterpart to that. If you're applying for a credit card online, SSA will now, since 2020, they've offered a service that will validate whether there really is a Jeremy Grant with my date of birth and SSN who's not dead. Been really helpful to prevent synthetic identity fraud, but none of the other agencies that are authoritative issuers of identity will validate the information similarly for banks outside of some DMVs. If you're trying to apply for government benefits, these days the user experience is that you're asked to duplicate more or less the somewhat crappy experience you went through at the DMV, but this time you get to do it online, either through login.gov or one of the private sector accredited identity providers that offers a similar experience. And from a somewhat fascinating perspective, while the SSA will validate identity data for a credit application, they won't do it for government benefits, which has led to some really big issues with synthetic identity fraud in the government's benefit ecosystem the last few years. You're looking to prove that you're 18 to get spend some time on Instagram or view some sexy materials. We're seeing a proliferation of state age verification laws. A lot of states are now emboldened by a Supreme Court decision earlier this year that said that some of the laws pass constitutional muster. We've also seen a Senate bill call for the Commerce Department to create a new federal system just to support online age verification. And when you explain to the sponsors of that bill, you realize that's a new federal digital identity system, that doesn't always click. Again, talking about single-use systems, versus, common infrastructure. And if you're going through a TSA checkpoint, well, you can now use a mobile driver's license or an ID pass I have in my Pixel phone that ties to my passport at a lot of airports, but I can't yet use that MDL for any of the other use cases that are on this slide. So this is just sort of a snapshot of, where we are these days, and I think how much work we have to do. So some highlights from 2025 in the government and policy arena, and I'll hit a couple lowlights as well. So probably the biggest lowlight was in June, there was a new cybersecurity executive order that was issued by the Trump administration, which basically redlined language that had been in a couple of earlier Biden and Obama administration executive orders, including one the Biden administration had issued in late January. And redlining the language, which we thought was constructive and helpful, was bad enough. What was really troubling to see was the fact sheet that the White House put out, where their quote was, "The order strips away inappropriate measures outside of core cybersecurity focus, including removing a mandate for the US government issued digital IDs for illegal aliens that would have facilitated entitlement fraud and other abuse." There's not a single truthful word or phrase in that. One, I think it was troubling to a lot of people in digital identity, saying that anything with identity or authentication is not a core cybersecurity focus. And I shouldn't have to explain to this crowd why that's the case. But the EO that was out there in January had no mandate for the government to issue any sort of ID. In fact, focused on a lot of other things in the states. Certainly wasn't a mandate for illegal aliens. And, the idea that it would facilitate entitlement fraud, it was actually focused on jumpstarting the availability of ID to prevent fraud in government benefit programs. What the executive order that was issued back in January did was a few very modest things. It told NIST to publish its guidance that they've been working on how to start using MDLs for remote ID verification by this month. Told federal agencies, hey, you should start to accept MDLs for public benefit programs rather than trying to force people to go through some sort of a third-party tool. And said that MDLs issuers should not be using the credentials to track people. Said that agencies ought to explore making grants to states to help accelerate MDL deployment to fight fraud and identity theft. And it told Treasury to pilot an early warning system where people could basically get notified if their identity data was being used to apply for public benefits programs and it wasn't them, which could help stop identity theft. So that, I would say, led to a lot of people being quite concerned, certainly me, about where the state of things was going with the administration. And then the next few months happened, and a bunch of other things were said that were totally different. So in July, the then acting administrator of the GSA spoke at an event and talked about how important mobile driver's license were going to be, despite the fact that the executive order had redlined a bunch of language to jumpstart MDLs, and talk about how they think that this is going to be the future and how they're going to integrate this into the login.gov platform as an option for Americans. There was also an event that month where the president spoke at, along with the Department of Health and Human Services, on making health technology great again. I've pointed out, I'm not sure that analogy works here, and that I don't think anybody thinks health technology has ever really been great, but it was a White House event which was heavily focused. This is an excerpt from the fact sheet that was released that day, on leveraging digital IDs that complied with NIST assurance levels at IAL2 and AAL2 to be sort of this magic key that if you went to a new doctor's office, you could present your digital credential and it would help to magically draw all of your patient data from other providers that you had been to before. And they specifically called out MDLs and passkeys in here and other modern approaches to identity and authentication. I want to be clear. This is not the first time a White House in a Democratic or Republican administration has been saying two or three different things on an issue. So I don't think this is unique to the Trump administration, but it has been a bit of a whirlwind to follow from June to July, and things that have happened since then. Also, at the end of July, the White House has had a crypto working group. They put out a big report, over 100 pages, on strengthening American leadership in digital financial technology. Had an extensive discussion of digital ID and the ways it can address privacy while also supporting more innovative approaches to AML and CFT compliance. Had firm recommendations. Again, this was a White House document 6 weeks after essentially eliminating an EO that was focused on the NIST MDL project, that said Treasury needs to engage with NIST on this project, along with their upcoming digital identity guidelines. And it called for Treasury to consider issuing guidance through, along with the regulators, on how financial institutions can start to use existing digital ID tools in some of their existing programs for customer identification. So again, kind of exciting relative to what we had seen the month before. A lot of what's happening as well is being driven by the Genius Act, which was the law that was signed by the president back in July after Congress passed it, that puts a formal regulatory structure in place for stablecoins in the U.S. one of the things Congress told the White House to do on that, or told Treasury specifically to do, was to put out a request for comment on innovative technologies that can be used to detect illicit finance. So this was issued August 18th. The responses are due next Friday. And digital identity verification is one of the 4 technologies that Congress directed Treasury to get input on. So there's a lot of groups in this space across town now who are thinking through what sort of identity innovations do you want to see this administration and the regulators embrace. And there's also direction for Treasury to report back to Congress by the middle of January with recommendations on what Congress should look to do to perhaps help to modernize some of the whole BSA AML regulatory structure. Other actions impacting financial services, I think the way I would describe the mood in Washington is, we were in crypto winter for a couple of years, and it's now very much hot crypto summer here in DC, certainly from the policy and regulatory environment. And I think that, along with a lot more attention being paid by policymakers to concerns about financial fraud and scams and how those numbers have been going through the roof, in part, emboldened by attackers that now have Gen AI power tools. It's leading to a renewed focus on digital identity. FDIC issued some regulatory guidance in August that said you could start using pre-populated information from digital identity solutions for customer identification program requirements. And there was also a request for comment. This is a screenshot of what we submitted from Better Identity Coalition, a joint request for comment from the FDIC, the Federal Reserve, and the Office of the Comptroller of the Currency on what sort of actions could they be taking to address payments fraud. But wait, there's more. I mentioned before the NIST project that was, talked about in the EO and then subsequently, pointed to in other White House activities. NIST launched this late last year. This is actually something that we worked with the Hill back in 2022 when they passed the Chips and Science Act to get a provision in there that would formally direct NIST to go beyond just working on digital identity guidance in terms of if you're creating or issuing an identity, to also give guidance to states as they were starting to look at MDLs. How do you actually create a playbook of standards and best practices that can set a high bar for security and privacy and enable interoperability of MDL solutions across all the states? So they're working on that right now with a focus on enabling MDLs for remote ID verification use cases. 7 major banks, 5 of which are our members, are participating in this. It's a really, actually very cool model in terms of you have banks and tech platforms and fraud vendors and others all at the table with NIST. They're all working on this guidance together. And you can see where the deliverables are being posted sort of on a ongoing basis as they emerge at the page for this project. Things are stalled a little bit, if you might imagine, with the government shutdown right now, but hopefully that's resolved soon and they can wrap up some of this guidance. And then NIST also did a major update to their digital identity guidelines in August that I think is getting quite a bit of attention across industry. And certainly those companies that are looking to get the solution certified as meeting the NIST requirements will all have a big cycle of work to do over the next couple of years. We've also seen some great progress from SSA. I mentioned early on, one of the things that SSA has established over the last few years is a service, the Electronic Consent-Based Social Security Number Verification Service. It's a mouthful, eCBSV for short, that will validate, whether information in their records matches what a consumer submits to a bank. It's been a really encouraging program, but it's also had a lot of problems, and that sometimes, my name might be Michael, but I'll write Mikey in the application and it'll come back as a no match. And so we're seeing some banks see too many false positives. We've been asking SSA for more granular responses. Could they also open it up to other sectors outside financial services? So if I got to pass, say, a background check to coach my kid's Little League team, I could ask SSA to validate this information. And they needed to come up with some creative ways to reduce the cost of the program to make it, I think, more competitive with some private sector tools that try to guess what's in the SSA's database, even if the SSA database is the one authoritative one. So they're making some of those changes. They put out a press release in March, and I think, there's sort of the new version of it that the financial services industry is now shifting over to, that I think is going to make it a much more valuable tool. We've been really excited to see this, and the coalition have worked quite a bit with SSA and with Congress on getting some of these changes in place. We're also seeing a lot of activity in the states, whether it's, I mentioned before, the Supreme Court action on age verification, new concerns around the sale of location data being driven, among other things, by some of the ICE raids in the States, and just what we're seeing with litigation around biometrics. A word on age verification. I think between the wave of bills that we've seen in the States and now the Supreme Court decision, it's very much here to stay. But I tend to view it as an identity challenge that's hiding behind a child safety issue. And I think as we talk to policymakers, most of them don't understand this. The idea, and I live this, I've got 2 teenagers, that in order to be able to access, say, a social media site, I can prove I'm me and an adult. I can prove that these 2 kids, who my kids actually have IDs because they have passports, but a lot of kids don't, prove these kids are really mine, prove it's really me authorizing them to access some site that you need to be 18 to access and not one of their friends who's figuring out a way to hack the system. It's very, very difficult. And, looking at this issue in a silo rather than looking more strategically at how to leverage, digital identity tools that are out there, I think is leading a lot of states and industry to deal with, I think, a lot more headaches on this, and consumers and parents and kids with a lot more headaches than, might need to be done otherwise. Talking about California, we were engaged this year on a bill, AB 322, which would ban most use of precise location data. And an issue that we flagged there was a security carve out, but it was really weirdly crafted. It said you can use geolocation data to respond to a security incident. All right, that sounds sensible. Most uses restrictions on data in the States or at the federal level or around that world, for that matter, allow you to use it to deal with security and fraud incidents. But it did not say that you could use location data to detect or prevent it. And that bill got sidelined this year in the State House. It's probably likely to come back again in 2026. But I would say for any of you who are in the security and fraud space who care about location data, this is one you may want to watch. From the coalition perspective, we're certainly going to be, continuing to engage in this one. And then, I think with what we've seen with states, even as BIP has been reformed a little bit, there still tends to be a lot of litigation around biometrics. Our firm on the legal side gets a lot of questions from clients around, how do we architect, our use of biometrics if we're collecting it from consumers or employees? What are the consents we need to have in place? Basically, how do we not get sued? And so, one thing that, remains clear, and I don't think is going to change anytime soon, is any collection or storage of biometric data continues to bring legal risks. The good news is, whether it's with our firm or, there's others out there that are quite good at this as well, talk to your attorneys, help figure out how you actually get ahead of this and design a system so that you're not going to open yourself up to, some of this, in some cases has been, really crushing litigation. So that is all I had. And you can see where to contact me. But I think, Filip, I'm going to hand things back to you, and we're going to talk about questions and predictions.
Yes, absolutely. Thank you, Bryant and Jeremy. Great stuff. Jeremy, since you were the last one to go, I'll go with you first. Give us 1 or 2 predictions for 26. I think you've alluded to a bunch, but put them in stone. Which are the two?
Got it. Well, I'm going to skip the Agentic AI one because we talked about that already, and that's the obvious. Look, I think for policy action in 2026 in DC, financial services is where most of the government action is going to be. There's a very big push, as I talked about earlier, to deregulate, simplify regulations, particularly for financial services firms and new entrants like fintech and crypto. But the challenge is, how do you simplify regulations? How do you show that you're innovating while also making the innovations meaningful? And then what we don't want to do is just get rid of all of the rules around KYC and any money laundering, which is going to lead to some very predictable outcomes. And so I would say the folks that we talk to in Treasury and the regulators are trying to think very creatively right now about what can they do to both embrace innovation, but also have it be meaningful so that you're not opening the door for a lot of bad actors to come in and exploit it. I think the second big thing you're going to see in 2026 is that verifiable digital credentials, particularly mobile driver's licenses, are going to finally start to be used, not just to get through a TSA checkpoint, which honestly isn't that interesting of a use case, and more will be used to start to support remote online identity proofing. You've seen announcements from Apple and Google around how they're starting to build new functionality into their platforms and the wallets to be used for online presentment and not just in person. And I think, between that, you've seen the sharp interest in the NIST project with 7 big banks participating. They're very eager to start to offer this to some of their customers. And I think you're also going to see the regulators formally come out and bless or endorse the use of things like MDLs for this purpose. And then I think a key question, getting back to the things that you all are looking at in the market or the investment space, is as MDLs start to be used here, how does this impact some of the legacy identity verification providers? I'll say a lot of the companies we talk to, there are those that are thinking very constructively and proactively about this and viewing this as a awesome feature that they're going to build off of. There are others who may be caught a little off guard. So I would say that those are probably, two big issues that I would look ahead to next year.
Awesome. Bryant, same question for you.
One thing on the AI topic, one thing I didn't speak about that we're observing is the underlying data, right? I think this becomes ultimately an identity plus sort of data security issue. I think most employees and consumers are learning to use tools. Companies are encouraging it. What is unclear, and I think becomes a massive security vulnerability, is the whether it's nefarious or not, right? The exfiltration of really sensitive company or personal data in use of or in leveraging some of these kind of internal chatbots and LLMs. And so you don't have to look further. It's really interesting to look at, this is kind of outside the identity world for a second, but like the data protection and backup businesses, whether it's Commvault or Pure Storage or Rubrik, these guys are trading at all-time highs right now. Their stocks are all up 100% year over year. And I think investors and investors, but also companies are really sort of leaning into that story as well. So that's another sort of interesting trend to observe kind of around this AI topic.
Awesome. And I'll ask myself the question too. Philip, what do you think? AI, agentic AI is going to be massively changing the identity space. That's not a big, it's not a big shock. And then the second one is this convergence. We still believe that all of these areas are going to come closer and closer together. Fraud and AML, fraud and cybersecurity, identity and cyber, they're all going to be one big pot. And they're all going to hopefully work together to try to combat this fraud, this deepfakes, synthetics. So convergence. And I think that might, again, Bryant, that might lead to like, there's going to be some roll-ups. I'm sure there's going to be a lot of roll-up activity as well. Jeremy, for you, is the government thinking about this at all, about like these convergences, or they think in silos?
I mean, from a broader identity perspective, I talked before about silos, but I do think there's a lot of attention right now. Look, Gen AI powered deepfakes are getting a lot of attention in Washington, and particularly the message that policymakers and regulators are hearing from, impacted stakeholders, particularly banks and fintechs, around how sophisticated the tools have gotten, how quickly, something that was a very resource intensive, difficult attack to execute just a couple of years ago. Say, like, I could be a deepfake on this video. And, that'd be a really hard thing to pull off. Now there's tools that are out there that are cheap, commoditized, don't require a lot of skill to use. And, a lot of the, folks in government I talk to are up on Capitol Hill, they're asking the question, what does it mean if we're in a world where any photo or video or voice can be easily spoofed with a deepfake? And, the answer I've pointed out is, look, deepfakes can compromise all of those tools. One thing that they cannot spoof is possession of a private key. And so I've become increasingly bullish on things like MDLs or passkeys in the authentication space that are built on this very old but still pretty secure technology of public key cryptography as a way to help get ahead of some of these deepfake attacks rather than be trying to catch up to them with other technologies. And that's not to besmirch tools like liveness detection that are out there, which I think are also quite valuable. And, you're seeing a lot of our clients that we help with on the implementation side are taking a layered approach. But there's a lot of excitement around, look, if I have a client with an MDL, that's something I can go to validate possession of the key, that I don't have to worry as much about the biometric spoofing.
Great. I know we're going to do Q&A, but we are very close to time. So I'm going to ask one of you one question each. We're tracking the questions, audience. We will answer those questions offline that we do not get to. But start with Bryant. Do you see the fraud markets poised for roll-ups? Do you see identity markets poised for roll-ups, or is that several years out?
No, I think it's happening. I think Thoma Bravo on the identity side is definitely leading that. I think it's interesting, right? I think private equity does play a role in this because I don't think a Ping ForgeRock merger, for example, happens without a Thoma Bravo. Thoma has also took SailPoint private, brought them back public. They've had a lot of success. They sold Venafi to CyberArk, so they are just all over the identity space right now, and I think are definitely big believers in this identity convergence. We're working with a couple of the other large players in identity right now. They are all telling that story, right? Where can there be additional consolidation? I think it's going to be less about the consolidation of, say, two large PAM vendors, for example, and probably more a story about adding additional capabilities. I do think a lot of them are going to be very interested in some of these fraud use cases. And so I think Ping, as I mentioned earlier, is going to be probably the one to pay closest attention to in moving from kind of squarely workforce identity into more of that SIAM use case into fraud. I think that's the most logical player to kind of start with that story. On the fraud side, I do believe there will be roll-ups. I think we've talked a lot about this, Filip, over the years at the Liminal events. The challenge to date has just been there isn't a very logical, private equity-backed asset that's trying. I think Encode buying Authentic ID was a really strong signal. I know Encode's had ambitions to do more and be more and add. But you're absolutely right. The space is incredibly fragmented. It is very difficult for customers to distinguish amongst some of these capabilities. And so I do believe that there's a great opportunity for some of the larger firms, whether that's, Socure or some of the larger names, to be acquisitive and add, capabilities, right? Again, with the emphasis of actually cross-selling some of those capabilities and not just kind of doubling down in really what they do. So that's sort of my prediction. I think it is happening real time. I don't think it's a few years out. I think it is a 2026 trend to watch for sure. It's happening right now.
And then Jeremy, one for you, and then we get a wrap. There is a healthy mistrust against the government in the U.S., especially at the federal level. How do you envision a solution which provides a distributed digital identity system that doesn't allow for abuse?
Yeah, it's a great question. So a couple of things. One, I think one of the reasons I'm bullish on things like MDL or what the SSA has done with an attribute validation service is it's not creating any new identity systems. And I think this was something where we really helped to change the debate on digital identity in the country back in 2018 when the Better Identity Coalition published its first policy blueprint, which was all of these discussions always within 30 seconds go to the idea of a national ID card. And, I've always pointed out, as somebody who's been in the space a while, I found it really frustrating in that there's a lot of ways to solve identity that don't involve ID cards at all or anything that's a new system. And we pointed out, we don't need a national ID card. In fact, the problem we have is we have too many cards today. We have a driver's license and a social security card and a passport, which I guess is a book, and a global entry card and a birth certificate. I can take any of those and go down to the bank around the corner or government agency 2 blocks from here or the hospital up the road and use it to prove who I am in person, but there's no way to use any of those online. And so the model we laid out was don't create anything new, but why can't I have the option as an American of getting a digital counterpart to all of those nationally recognized authoritative credentials that are issued by a mix of federal, state, and local agencies? I already went through a crappy process at the DMV 2 years ago here in DC to prove who I was to get my Real ID driver's license. If I'm watching the football game this weekend and want to apply for a Capital One Venture card when Jennifer Garner comes on, why can't I have the DMV vouch for me? Say, hey guys, remember me? Of course you do. You tell the bank these 5 things about me, have it be digitally signed. So I think that model has resonated quite a bit with a lot of skeptics on the right and the left, because you're not talking about creating a new system. There's no new data. It's just leveraging what you have there. The second thing that we're actually working on, and in fact, this is the first time we'll publicly announce it, we'll be holding an event in DC, but also online October 30th from the Better Identity Coalition, rolling out a straw man for what we're calling a verifiable digital credentials code of conduct. And this is intended to specifically address concerns around not just government, overuse of these credentials, but also the private sector. If I'm using my MDL to order a pizza, do they really need to see my ID? If they want to know my address to make sure it's really going there, do they need my height and weight? Other countries, the issuers of digital identity that are government are actually putting firm rules in place. We're not seeing any of that in the US. And so, we've been working with the cross sector of our members, which include big relying parties and the platforms. Apple and Google are both members of the coalition, and folks in the privacy and civil liberties community to create a straw man of what might essentially be a self-regulatory approach to this issue. So we'll be rolling that out for feedback the day before Halloween and looking to get comments from a wide array of stakeholders. And we're hoping we can get ahead of some of these policy and trust issues that are lingering out there as digital credentials are hitting in the marketplace, sometime early next year.
Awesome. On that note, we're going to close this one out. Audience, we will share the we'll share the materials. If you want to reach out to us, please feel free to do so. You can catch Jeremy and I next week at Authenticate in person. And then I know, Brian, you'll be at Money 2020 at the end of the month. So feel free to hit us up before that, or let's connect in person. Again, Jeremy, Brian, thank you so much for being here today. I really enjoyed the conversation, and talk to you all soon.
Thank you.
Thanks.
Have a good one.